will be there. No question of sale of land will be there. Therefore, 1/3 deduction will also not be eligible for it. It's like asking other person to do a job for us. Then is a pure labor and pure sale of material. Maybe a developer or promoter, they might engage another person either only to provide service. It's not the case they will get for composite, means doing both construction also and getting the material. They may also get two separate bills where they have engaged some person for the purpose of getting the labor, for the purpose of constructing it, and there may be another contract for procurement of material. So where the material is involved, obviously there will be respective rate of material as applicable to them will be applied. And when it comes to labor, then your GST rate of 18% with IETC came into picture. Now, why we have discussed this basic GST rate is to understand the exemption which is eligible for a single residential unit. So we need to have this basic framework in our mind that how the GST rate structure works. When you are going for a composite contract, means works contract type of service, then there are two rates, 18 and 12. But where there is a separation, where you are procuring service separately and one where you are procuring material separately, then your rate get changed. Because for pure service, it is 18%. And for material, as per the rate applicable, it may be like cement for 28%. It may be for a granite, that is also at 28%. Sand, pebbles, bricks, red bricks, which are of different rate, 5%, 12%.
Okay. Ashika, I'd like to add 3 points to this. Okay. Firstly, this 1/3 land deduction is set out in the notification. However, we bring to the notice of the participants, there is a decision of Gujarat High Court where if the value of a land is separately identified and agreed upon, there is a possibility of excluding the actual value of land and pay tax on the construction value. In such a scenario, the top 1%, 5%, 12% should not be looked into. You should look into the below rates, that is 1.5, 7.5, and 18%. This is point number 1. Point number 2, this PMAY like scheme 12%. After 18th of July 2022, there is a change. Please be cautious about that aspect. Third aspect, when it comes to works contract supply without land, always there is many people ask me a question, sir, isn't it the landowner, sorry, the developer, when he does a construction work to the landowner, wouldn't he be covered under this type of contract where it is without land, because land is already owned by the landowner, especially in Tamil Nadu region, because of the way the land laws operate over there, to my understanding. Okay, so there I would again bring to your attention the explanation given in the notification itself as to the valuation, where they have specifically said in case of the services provided by the developer to the landowner, the value of construction shall be the market value of a similar apartment sold by the developer to the outsider, less land value reduction of 1/3. So this is a deeming fiction which is there. Since there's a deeming fiction, this particular works contract concept, which is being explained here, is not applicable for a transaction between the developer and the landowner. Similarly, even coming to the rate of tax also, they can go for this 7.5% or 1.5%, as the case may be, in case of a developer providing services to the landowner. So in other words, this work contract supply without land is essentially for a general type of contracts which is applicable other than the projects covered under RERA. So these are 3 points which I thought I will just bring to your kind attention. Ashika would like to add anything or comment on anything on what I said?
No, sir.
Yeah, you can proceed, please.
Okay. With this rate structure in our mind, we shall move forward to discuss about the exemption which is eligible under for the real estate project. Now over here, we are basically focusing on only one exemption, that is entry number 11 of notification number 12. Notification number 12 basically deals with exemption. It provides not only exemption in relation to real estate, but all type of services. Exemption has been provided there only. If anything is to be checked whether GST GST is exempted or not for service, you have to refer notification 11. Now coming to entry number 11. This entry number 11 provide an exemption that if services provided by way of pure labor contract of construction, erection, commission or installation of original work pertaining to single residential unit otherwise than as a part of residential complex. So this exemption has only been provided when a service is provided by way of pure labor contract. And as we discussed, pure labor contract is taxable at the GST rate of 18%. Now, as you know, that when we discuss about this supply with land, where there is a JDA agreement. In that case, the promoter or developer is not eligible for ITC. So for construction service, they have specifically barred the ITC availment. Therefore, 18%, which the GST is chargeable on labor contract, become a cost to the developer and the promoters. However, in case of residential unit, single residential unit, they have provided this exemption. So while taking the benefit of exemption, we have to keep in mind whether it is qualified as a pure labor contract or not, first thing. Second thing, whether it will be regarded as original work. Third, what is single residential unit and what is a residential complex? Because exemption is only for a single residential unit, not for a residential complex. Now, all these 4 things we will be taking one by one. Now, service provided by a pure labor contract. Now, pure labor contract is nowhere defined under GST, means what it should be. But normally, as a common trade parlance, the way we use is only provide of service, no material. Means there should be only a labor service. So that labor service may be on a daily basis, weekly basis, whatever may be the terms. It may be also like for construction of foundation, you have been engaged. Then also it's a labor, provided there should not be any material involvement. Now, that we need to check in order for a pure labor supply, because if there is a involvement, if there is a supply of material, then and it is in relation to immovable property, then it will become works contract service and exemption will not be eligible for it. Second part, original work. Original work is specifically.
Ashika, I would like to add this this pure labor I mean, this supply of labor vis-a-vis different from the construction contract with pure labor. So that you please explain later. Difference between a manpower supply vis-a-vis a labor contract for a construction. After the end of these points, you can just explain that.
Okay, sir.
Yeah.
Original work. Original work is specifically defined under GST. They have mentioned it should be all new construction, all type of addition, alteration to a abandoned or damaged structure on land that are required to make them workable. Now, this third part is not relevant for us, because it relates to plant and machinery, not in relation to construction of immovable property. Now, the term construction has also been defined by way of Schedule 2. We say that addition, alteration, replacement, remodeling of any existing civil structure. However, the way the construction is defined in Schedule 2 and the way the original work is defined, it seems that they mean only to cover all new type of construction, not the remodeling or replacement of the existing structure. So while reading the original work, they haven't relied on the construction definition, which is provided in Schedule 2. As per for the purpose of exemption, we have to look into this, that it should qualify as a new construction, because the word over here is not used construction, it is used as new construction. Means there should be a newly constructed property over there, not a remodeling or replacement of existing civil structure. However, if it is in relation to addition or alteration to abandoned or damaged structure on land, then also it will be qualified as original work. Means over here, for the purpose of exemption, the definition of construction has been restricted. It is only limited to new. Now, single residential unit. Now, the single residential unit, the way they have defined is that it should be for the use of one family. Now, use for one family is very doubtful how it should be considered, because it may be a case if there are two brothers, both brothers having their family, wife and son, daughters, their children. Now, if that family live together and have constructed first floor, second floor, will it be considered as a single residential unit? Because over here is saying for one family, and the word family has not been defined under GST. Now, what it should be considered? Because the way it is read is, it should be a self-contained residential unit, which is designed for use wholly or principally for residential purpose of one family. Now, what does one family means? Though under GST it is not defined, but under RERA it is defined. It is said that family include husband, wife, minor son, unmarried daughter, wholly dependent on a person. Now, it may be noted, GST does not refer to RERA Act for the purpose of family definition. So as taking our example, if there are two brothers who are having their own family, whether we should consider as a one family or two, because in that case, both the brothers are independent. It's not that they are dependent on each other, but it's like a joint family. So whether a constructing of first floor and second floor being a single residential will be regarded as single residential unit or not is a question to be examined, which we will be taking in our issues, which we'll be discussing later on. Now, for single residential unit, I have taken the help of pre-GST regime. Under service tax regime also, there was exemption for the same. Now, let us first read how they have mentioned it. What will be the service tax liability on construction of two-floor house constructed through a contractor, and contractor is demanding service tax? So how they have mentioned in service tax education guide is, service tax is payable on construction of residential complex having more than one single residential unit. And single residential unit is same as defined under GST. That is self-contained residential unit, which is designed for use wholly or principally for residential purpose for one family. Now, how they are differentiating the taxabilities? If each of the floor of your house is a single residential unit in term of the definition, and the contractor is rightly demanding service tax, if title of each floor is capable of being transferred to another person by mutation in land or municipal record, both the floor may be considered as a separate residential unit. So what we have to see, if there are two floors, then if one floor you are able to sell, then they are saying that single residential unit will get the definition of single residential unit will get defeated, even if it is a joint family, because as you will be able to sell second floor or first floor independently of each other. Therefore, they are saying GST will be applicable on same, and the benefit of this exemption will not be eligible for it. Now coming to residential complex. What does residential complex means? They have defined as complex comprising of building or buildings having more than one single residential unit. Now, word building and buildings is not defined under GST, but RERA Act defined the buildings, which said that include any structure, erection, part of a structure, erection, which is intended to be used for residential, commercial, or for the purpose of any business, occupation, profession, trade, or any other related. So basically, if you are having like a complex system, where there are multiple floors, multiple apartments are constructed in one floor, where people can reside or use for commercial plus residential purpose. So in that case, obviously it will be regarded as residential complex or not a residential unit, because the word which is used is single residential unit, means only one unit it should be there, then only exemption will be available, not for all the residential apartment been constructed. So this were the 4 parts of that exemption: pure labor, original work, single residential unit, not a residential complex. So in order to avail the exemption, we need to be very much careful with 4 of this term. If we are able to cover under the first 3 and not under residential complex, then we will be eligible for exemption. Otherwise, it will be outside of it. If it is not a pure labor, means where there is a composite supply, material plus labor, then it's a works contract. If it's not a single residential unit, even though it's a pure labor, then a GST rate is 18%. And if it is a residential complex, then also GST rate is 18%. Now, what's the sir asks is what's the sir that works contract service or pure labor service? Now, works contract service has also been specifically defined under GST Act. So the way it has been defined is that it now relates only to immovable property. Unlike under PGST regime, works contract service also include movable property. Now under GST, it is only limited to immovable property. So if works contract is contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commission of any immovable property, wherein transfer of property in good is involved in the execution of such contract. So it's a composite supply where labor plus material, both are there, first thing. Second thing, if you will read the works contract, it is very wide. It not only consists of construction, erection, installation, and commission, which is in your pure labor one, in the exemption. Exemption is only for construction, erection, commission, or installation. But when you comes to works contract service, the definition has covered under it fabrication, completion, fitting out, improvement, modification, repairs, maintenance, which is not available in case of exemption under pure labor service. So only this 4 term, if you have provided service for only for this 4 terms, then only you will be eligible for exemption. Otherwise, it will be taxable at the rate of 18. However, when we come to works contract, all this nature of type of supply, if you provide where there is material plus labor, then it will be works contract. And for works contract, again, it will be 12% if it is under some scheme, or 18% if it is other than scheme. Sir, you want to add something?
Yeah, 2 points. Prior to 17th July 7, 2022, this type of works contract for construction of single residential unit other than part of a residential complex was taxed at 12%, but after that date, that is from 18 July 22 onwards, it is made liable at 18%. That is the one major change. If you already have any contracts, you might relook at it. Point number one. Point number two, when we talk about Ashika, can you just go back to the pure labor slide, please? Yeah. Okay. Supply labor. I was trying to make a distinction between the contract for construction with service contract for supply of labor. Be careful. If you are merely giving a people on day basis, humans who is giving a labor contract, who doesn't who have a responsibility of a piece rate, etc., may not fit into the definition of the construction of residential complex. So the contract should be with the responsibility of a construction, not merely supply of labor. This is what I was trying to highlight on that aspect of it. In addition to metal not being used, so it should be payment maybe on a daily basis, weekly basis, but the scope of work should be for the construction. So that is more important, which we need to keep in mind. Okay, right, Ashika, you can proceed.
So with this, we come to the end of our first part, that is about exemption,
Ashika,
which is
practical side of it, I think how it works in villa project, should we discuss that, or you are discussing it later?
that I'm discussing at the end, means after impact of RERA.
Fine, good, thank you.
Okay. So with this, we come to the first part, and is how the exemption is to be applied. If you have seen, though it's a simple terming, they have used that supply of pure labor for construction for single unit other than residential. So it seems so simple. Oh, okay, if I'm doing this, I'm exempted. But the way they word it and the way the things have been defined, like sir pointed out, only supply of labor, you won't get the exemption. It should be for the purpose of construction or erection, commission, or installation. So each and every, the way we divided it into 4 parts, all that you have to take into consideration in order to determine whether you are exempted or not. Because the most of the time when the sale happened, you are selling to the end customer. And after that, there is no recovery for GST. Because once the thing has been done, even the person for whom you have executed will be unwilling to give it, because if it is a developer or promoter, it's a cost for them. And if the service is provided to the ultimate consumer also, it's a cost for them. So you need to be very much careful before entering into a contract, whether you will be eligible for such exemption or not. Now, all few issues we will discuss after the impact of RERA. How the RERA is going to, what are the impact, means basically how the things of RERA is have the impact on GST, we will discuss about it. So with the starting of it, first we would like to highlight you about the various definition which they have taken from RERA. Now the construction is more or less how the taxability on construction, more or less, or somehow it is dependent upon how the things has been explained under RERA. How you are taking registration and RERA. It's playing very important role in determining about the GST rate, which will be applicable to you, how the IETC availment will be there, and even whether that project can you opt for different rates. Like we can obviously, if it is an there may be a case where one villa construction you are getting purely exemption. There may be a case where in one villa you are liable to pay tax. So how this is going to impact you, we are going to discuss on. Now, if you will see promoter under GST, the promoter definition they have take from RERA Act only. So if a person qualify as a promoter under RERA, then only he is a person regarded as promoter under GST. And it's very important. Nobody or anybody can become a promoter and developer. If you will see everywhere where they have given notification for GST rate applicability or for RCM or exemption, the word they have used is promoter. And that promoter definition they have borrowed from RERA. So under RERA, if you are not registered as promoter or you don't qualify as a promoter, accordingly, there will be changes or consequence under GST also. Because if you are not qualified as promoter under RERA, now the question arises whether RCM will applicable or not. On development right, promoter is liable to pay under reverse charge mechanism. So will promoter will be liable or not? Because as per RERA, both landowner and promoter both need to be registered under RERA. So this is the first promoter definition. Then project. Now the project under GST is two types: real estate project and residential real estate project. Under RERA, project does not mean real estate or residential real estate project. There is only one type, which is a real estate project. Now, what is real estate project? That again they have borrowed from RERA. Real estate project means the development of building consisted of apartment, converting an existing building, part thereof into apartment, or development of land into plots. The sale of developed plots is also covered as real estate project under RERA, which will also be considered as a real estate project under GST. As the case may be, for the purpose of selling old or some of the said apartment, plots, building as the case may be, including common area, development work, all improvement, structure thereon, and all easement rights, apartments belonging to thereto. So the way the real estate project is defined, it covers everything, whether it's a residential apartment, commercial apartment, they don't give any bifurcation for it. But when it comes to GST, they have divided into residential real estate project and real estate projects. So you have to take care whether you, though for real estate project, you will refer under RERA, but for residential real estate project, you have to refer under GST. Now, apartments. Apartment also, they have borrowed the definition from RERA, which include commercial also and non-commercial also. The apartment definition is very wide under RERA. It's cover all block, chamber, dwelling unit, flats, office, showroom, shop, go down, premises, suite, tenement unit, or by any other means as a separate or self-contained part of any immovable property, including one or more room, and include space located on one or more floor or any part thereof in a building or on a plot of land used or intended to be used for any residential or commercial, such as residence, office, showroom, godown, or for carrying out any business, occupation, profession, trade, or for any other type of use of ancillary to the purpose specified. So there are not or a maximum definition they have borrowed from RERA to define under GST. And accordingly, we have to go hand in hand, RERA and GST, to understand the applicability of GST on real estate project. Even carpet area definition is borrowed from RERA. However, as we said, real estate project is defined. But what is residential real estate project is only defined under GST, where they have mentioned about 50% condition. So if 15% your commercial area is less than 15%, then only it's a residential real project. Otherwise, it's a real estate project. Now, building is not defined under GST. It's under RERA. Even the definition has not been borrowed from RERA. So this is just a comparison we have brought in to brought in front of your people how the GST is dependent upon the RERA Act. Another important thing is about RERA registration. Now, for RERA registration, we know that for every project, you have to take RERA registration. There is one explanation to Section 3 of RERA Act, which says that if you are developing a project phase-wise, and that phase-wise project you will be, and if you are taking registration phase-wise, it will consider as a standalone real estate project. Means if you are constructing 10 towers, and you have taken RERA registration phase wise, suppose for 2 tower, 1 registration, again 2 tower, 1 registration. So that all the 2 tower will be considered as one single project for RERA. Now, what will happen under GST? Whether in GST that 10 tower construction as a whole will be regarded as one project, or like under RERA, as you are following as 2 tower, 1 project, 1 registration, 1 RERA registration, or it will be regarded as 5 projects. That is what we now going to look into. So these are the few clarification that they have given, which are dependent on the RERA Act. One of the clarification is that, like we discussed, that in a RERA, you may take separate registration depending upon the project you are undertaking. So the question which arises whether for different project under RERA, will the same way it will work under GST? The answer is yes. If in a RERA, you have taken phase-wise registration or a project-wise registration, accordingly under GST, that will also consider as a separate or distinct project. This is what they have clarified in this the FAQ, where the question has been asked is, in case of single building registered as 2 separate projects under the provision of RERA, first to 10th floor as one project, 11th to 20th floor as another project, whether the developer can consider the entire building as single ongoing project, since all the condition to comply with for classifying as a project as ongoing project can be satisfied only if entire building is considered as a single project, because it's a one building with 20 floor for which RERA registration has been obtained 2. Now to that they have replied that both the project registered as a separate project under RERA shall be treated as distinct project for the purpose of notification 11 as amended by notification 3. So the way the registration is taken under under RERA, the same way it will be considered under GST. If there are 2 registration, 2 project under GST, it's not that it will be regarded as one project. So RERA registration plays a very important role, because it may be a case you may opt for a different, like one can be opt for first 10 floor old rate, and for next 10 floor new rate, depending upon your cost which is involved there. So even for one full building consisting of 20 floor, but 2 RERA registration, you can go for a 2 variety of rates. Now, another part, furthermore, another question which has been clarified is, if different tower in a single layout are registered as separate project under the provision of RERA, but where the approval are common for all the tower, whether the developer can consider a layout as single ongoing project. Again, no. All the towers are registered, even though it's a single layout. But for RERA, you have taken different registration. So they are saying, I will consider as a different project. Now, how this is going to impact, we will discuss in our issues. How this registration is going to impact and what benefit will be available to you. This is also the same thing they have clarified, that if there are for RERA, if there is you have taken separate registration, you can take project wise registration, and for project wise you can opt for a different rates. So they are saying we will also consider under GST also different project, and it's upon you how you have to move on, whether you have to go by old rates or new rates. Now, in this part, this is another clarification where Residential real estate project sells mean real estate project in which carpet area of commercial apartment is not more than 15%. Like I said that real estate project is defined and they have borrowed from RERA, but there is no term of residential real estate project under RERA. They have under GST defined that, and which they said that commercial apartment should be less than 15%. Now, carpet area definition is also borrowed from RERA. So now the question before it, whether a non-sellable area such as society, office, clubhouse, etc. are to be taken into consideration for determining 15% for deciding whether a project is RRP or not. For that also, means for that also they have rely on RERA. So apartment shall be taken as commercial or residential apartment as declared to RERA authority. So it's very important what are the registration you are taking, how you are declaring to RERA in order to determine that, because commercial is at higher rate. It's 12% with ITC. When I say 12%, I'm saying effective rate after 1/3 deduction. And residential is at lower rate. Non-affordable 5%. So how we declare before RERA and how we take registration and RERA will determine how the same will be considered under GST for the purpose of taxability, ITC availment. So we, and for RCM also, because for project, individual project wise, they have put a restriction that you can't purchase more than 80%. So all these three things, taxability, GST rate, ITC, and your RCM depend upon RERA, because it will be project wise, and that project, how you have taken RERA under registration under RERA, how you are declared under RERA will impact your GST liability. Sir, you want to add something?
You can go ahead. You can go ahead.
Now, these are the few selective issues which we have taken. One is construction of bungalow with multiple floor. You may be constructing a single unit, but with a multiple floor. Now, as I discussed by referring to my service tax guide, though it's related to pre-GST, but reference can be made. Now, it depends how the bungalow is constructed. If that bungalow with multiple floor is from inside the apartment, means it is from inside and it is not separatable, means whether the villa, that bungalow can be sold as a whole or you can sold each floor, will determine your exemption. Now, if that bungalow can be sold wholly only, it will be regarded as single residential unit. It's my opinion. So exemption will be eligible.
I think I also agree with Ashika. Basically, we need to see practically. In nowadays, villa projects will have a duplex, triplex, which will have multiple things, but it is designed as a one house. So in such a scenario, irrespective of the floors, which doesn't have a identifiable separate identity as a separate residential unit, it can be considered as a one single residential unit. Yeah. Ashika can go more to the next one.
Okay. Now, construction of row houses, villa or individual houses which form part of gated community. Now, this is also very common. Now, our point of view sometimes is that see, we are the constructing single residential unit in one plot. There may be a 10-acre plot where one single in a row house basis construction has been done. Now the view will be that, see, I am doing construction of single residential unit. So it cannot be regarded as residential complex. No, because it's not like a building. Now the question will be whether exemption will be there or not, or will it fall under single residential unit. Now in this, again, your RERA come into picture. How you have taken that registration, how that project you have classified. And in my personal opinion, I don't think so you will be eligible for this exemption, though it's not a single you may say that it's like a single residential unit, but it's like that it's a community which you have been developing. And the purpose was not to give exemption for this type of it. It was to provide exemption to individual person. So I don't think so it will be covered under exemption. What your view, sir?
See, in this, there have been a different type of practices adopted by the trade. Here, I would like to emphasize on a couple of points under RERA, as is applicable for GST as well. Point number one, in RERA, though the project is defined to be inclusive of plotted development, on careful reading, you will realize the construction is used for apartments, whereas development is used for a plotted development projects. So in other words, the construction is for apartments, development is for a land. In RERA project, RERA, if we have registered that entire layout planning as a plotted development project and have sold, and after having sold, individually the approval takes up in the name of the buyer separately, and separate contract is entered with that particular person, with the whoever is doing this construction activity with pure labor, can examine the possibility. Again, caution should be kept as to it should not be construed as a design to avoid tax. So keep it in mind. So that is in reality, though it is a facilitation, there is a builder who will come and the design, the building. In fact, I have seen a projects where the plots are sold. Later on, they give an option. You come to me, I'll construct. I'll give you so much area of construction. Whether you construct, you design the, I mean, you choose the design, we'll construct it for you. Is one possibility where such benefit can be taken. Otherwise, in my view, also it is not possible to be taken, especially if it is a consolidated approval of a overall project as a villa project in a RERA. Ashika.
Now, another issue is issuance of two separate bills. Now, you have given one work and ask him that construction you have to do, you have to provide material, you have to do the service element. But in order to avail the exemption, the contractor can do what? He may think, I will raise one service bill separately, raise one material bill separately. For service bill, I will say it's a pure labor, fall under exemption for a single residential unit. And for material, I will pay the GST. Now, this cannot happen, because if one person is providing, just by merely dividing the bills into two parts will not change the nature of contract entered into it. If the contract specifically provide, tax planning can be done over here, but you need to look into how the contract is drafted. But by giving one person both the work, this will not work. In that situation, it will be regarded as composite supply and GST will be available. Department will, to the maximum, will try you to not deny this exemption benefit. However, if there are two concerns has been involved, where one is only providing service, another is only material, then for service, GST exemption can be claimed, and on material, GST is to be discharged. However, how the contract enter into plays a major role in this issue. Another thing is, sir, you want to add?
I think, go ahead, nothing.
Okay. Subcontractor eligible for exemption. Now, there may be a question may arise, like contract given to me is duly qualify under exemption, pure labor service only for the construction for single residential unit. And I further subcontracted it. Whether that subcontractor will also be eligible for exemption? Answer is yes. If we will read There is nothing under GST which is saying main service provider, subcontract service provider. Exemption only talks about service provided by way of pure labor and for a single residential unit by way of construction. So if all this are qualified, if your subcontractor is also qualifying it, he or she or the company will also be eligible for exemption and no tax will be livable. Even there is one advanced ruling on it. We have cited for it for your reference. Single housing project, like as sir discussed, that there may be a case for a single layout. You have taken a single RERA registration where there are multiple residential units. Then in my opinion, as I said, GST will be eligible. You won't be eligible for this exemption. However, point of view may differ on this.
No, I think if any such stand is taken, that will be subject to litigation, and the cost of litigation is going to be huge in GST, and there will be a lot of hand twisting tactics to force them to pay, and see it as a costing, whether it's going to help substantially or not, and then take a decision whether you need to take that risk or not. Yeah.
Now, another part of it is, now suppose if we don't qualified as a under this exemption, now what we can do? Because as I discussed, for the end party, either it's a developer, landowner, or any ultimate party for whom, consumer for whom you are doing this work, they are not eligible for ITC. Now what we can do is tax planning on this is about composition scheme. Now under composition scheme, for a service provider, they have provided a reduced rate of 6% benefit, that you pay GST at the rate of 6% and not at 18% with ITC. Thereby, it will ultimately reduce the cost to your end consumer. But this registered person service provider composition scheme is eligible only when the turnover does not exceed 50 lakh. Further, he should not be engaged in any exempt non-GST supply, interstate outward supply of goods or service, any supply of goods or service through e-commerce operator, notify goods or services. There is as such of now, they have given few notify goods or service, but pure labor contract is not covered in it. A casual taxable person or a non-resident taxable person. If all these conditions are satisfied, even though you are providing pure labor contract, but though it is not for single residential unit, you can opt for composition scheme, which will ultimately help in reduction of cost and will give you competitiveness in the business, because you will be offering at lower GST rate. Now,
I would like to add something. At the same time, you should also see what is a GST element on the materials portion, which you will be losing out the ITC. If there is a three contractors, where if you purchase, the 28% will become a cost, in which scenario you can ask them to, the supplier, to take ITC and charge 18%, so that impact will be reduced. In other cases, essentially where labor is there you can suggest them for going for this composition deal. Yeah.
And another benefit of providing this composition scheme is the condition which has come with new rate. Now, new rate provide that you are not eligible for ITC, but you will be eligible to pay tax if under reverse charge mechanism, if you procure input and input service from unregistered vendor. So if your procurement is less than 80% from registered vendor, then you are liable to pay under RC. However, when the procurement is done from a composition scheme, then as per the clarification provided by them, they are saying that I will consider the composite purchase or composite supply as registered. So thereby being outside of being registered will help in reducing the cost at the end of the developer or promoter or landowner, which will be ultimately a benefit to you. Because if you opted, if you are eligible, and as sir said, you have to also see the cost involvement toward your expense side ITC component over there. So if it is beneficial to you as a person who is providing a labor contract service, then it will be also beneficial at the end of developer and promoter, because they will also not be liable to pay under RCM for unregistered purchases, because it has been considered as a registered supply. So this is all on for today topic. If anybody have question, or sir, if you want to add something.
Nothing. I think we have covered all the topic. Now the floor is open for questions. Shweta, madam,
I request,
over to
yes,
you.
sir. I request all the participants, if you have any questions related to today's topic, please, you can raise your hands or you can type your questions. I'll unmute you and then directly you can ask the questions.
Sir, there is one question. After Gujarat High Court order on value of land, can a developer who is developing a residential layout on joint development 40:60, duly registered with RERA, be exempted from paying any GST as it is exempted?
No, exemption may not come because it's only the valuation is what they have dealt with. Is my answer answering the question?
Sir, this question seems incomplete. 1 minute. As the developer will be getting certain plot of land and will be selling the plot of land without any house construction.
Okay,
the
okay.
Sale of
plotted development. This is a plotted development. Plotted
Yes,
development. Okay. Please note, we are not addressing the plotted development in this session. But since the question is asked, plotted development, with the latest clarification, there are little anomalies which is getting created, because on the one hand they said sale of developed sites or plots is not liable for tax, no doubt. But after they have put a one time bomb by saying that development right by the landowner will be taxable. So that is something which we need to look at it carefully and also see whether RCM is applicable. In my view, RCM is not applicable. So the developer to landowner, definitely there is a service which is in the nature of a development activity. From the landowner to the buyers, it is not taxable. When it comes to the sale of the developer portion of the plotted land, in my understanding, there is a little of a dispute, because most of the time the immovable property is not registered in the name of the developer before being sold. He sells it under the GPA. Whether that can still be construed as a sale of land in terms of a third schedule is little doubtful. Subject to that, yes, on the sale of the landowner's portion, no GST by the developer, sorry, from the landowner. Similarly, on the developer side, subject to litigation. But whatever the value of this development carried out by the developer to the landowner for the entire project would become taxable based on the valuation rules. Ashika, next. Any other questions?
Sir, in chat box, there is no other.
So friends, any other questions? You can ask the questions or you can raise your hands. Okay, fine. Okay, so as of now, I think that's all as of now. So dear friends, if you have any questions related to today's topic or related to any topic related to GST or RERA, you can directly mail to us. My mail ID is rerapromo@reraconsultants.in, or you can directly go to our website, that is www.reraconsultants.in, and you can ask your queries. And if you have any suggestions related to the webinars, because we conduct these webinars on the monthly basis, so if you have any suggestions as per you, like this topic we should cover in the next monthly session, so you can directly call us or you can directly email to us. We will definitely take your suggestions and will proceed as per the management decision. So as of now, thank you so much, Rajesh sir and Ashika ma'am, for sharing your valuable time for this session that is on GST exemption on villa projects. We will notify all our friends on our next month's session. And if you have any suggestions, please reach out to us. Thank you, sir. Thank you, ma'am. And thank you all the participants for sharing your time. Thank you and have a great day ahead.
Thanks, everybody.